training. Um, Let me go back to my screen right quick. All right, can everybody see my screen?
Yep.
Yeah, I can see it. All right, cool. So this is gonna be just a back to the basics training, and this is for when I do. I'm gonna do another training just like this tomorrow at the same time. We're gonna start at the same time. We're gonna end at 8:30, and so we're not gonna cover. We're just gonna keep it basic. But I want to cover just what you want to be looking at if you're looking to get into the stock market, if you're looking to get into whether it's buying shares or if you want to be trading options and things like that. Some of the things that you want to get used to knowing when you're trying to trade with a stock chart so that you can make good decisions when you're trading. Okay. And so the first thing I want to cover is in the stock market, you want to know where billionaires and people that manage like trillions of dollars of assets like stocks, ETFs, you want to know where they're buying at and where they're selling at. So it's important for us to track their orders, where they're ordering at, so that we can know when it's time for us to buy into the stock market. You know what I'm saying? A lot of times when you don't know how to read a stock chart, you would just buy, you know what I'm saying, because some news came out. You would buy because somebody said to buy, but you want to get to the point to where you're able to look at a stock chart and then make a informed business decision when you're trying to buy shares, or if you want to jump into a play, you just want to make sure you're jumping in where it makes sense. Okay. And so one tool that you use to kind of know where to buy in is these zones on a chart. These are called order blocks. So let's go to a stock that's been dropping, or we can go to a stock that's recently broke out like Tesla. So if I go to Tesla, Tesla had a good day today. And if I go to their weekly chart, let's look at their weekly chart. And so you see how we have these green zones on Tesla's chart right here. These green zones represent exactly where institutions like JP Morgan and banks and hedge funds and people that have a lot of money, these represent exactly where they actually bought in and accumulated shares of Tesla. So because we can see this, we can use this to our advantage, right? Another stock that's trying to recover right now is Meta, right? So we can see the same thing on Meta's chart. You see, if we look at this candle right here. Now, if you look down at the bottom of my chart, you can see a date. You can see the date stamped down here. So when I put my mouse on top of this candle, that date says April the 29th, 2024. Okay. So this me having this green long zone right here means that on April 29th, 2024, an institution, a bank, a hedge fund came in and they bought Meta. And if you look at the top of my chart where it has this O, this H, this L, and this C, that just stands for open, high, low, and close. But you notice how these numbers at the top change as I touch different candles. It's just telling you the price of these candles. And what we're interested in knowing is the high and the low of the candle. So when I put my mouse on this candle that created this order block, it tells me that they started buying in, which is the low price. They started buying Meta shares at 427.11 and they bought it between 427 and 454, right? So that's when they were averaging in. So we're on a weekly time frame. So this was on April and the price came out of this range and then it pushed up all the way to this high right here of 5. I'm looking over here at this scale over to 543. Then it came back down. This is all the way in July. So March, April, May, June, July. All the way back in July, they bought it in April. It came back and tested it some months later in July. And look where it bounced from. It came right back to this same order block. And it since these orders, so the way order blocks work, when smart money or banks and people with a lot of money start buying a stock, when they buy the stock, they normally buy it on like a bearish candle. So they try to buy it while it's low. They bought in and put their buy orders in. And as those buy orders start filling, so in other words, like once the shares start getting bought up, it creates volume, right? It creates some volume and buy pressure and it shoots the stock out of that range. And then so it doesn't feel so if they had like a say they put $40 million worth of shares right here. So they bought like $40 million worth. So maybe $25 million worth of their money got spent while they were trying to buy these shares. Okay. Hold on right quick. Okay, call me back when you find him. Sorry about that. So maybe 20, $25 million worth of their shares got bought on this first order. So that left the other remaining $15 million worth of money sitting here still. So when price came back down and dipped into this zone, it started triggering buy orders again and it shot the price out. So look at here on the same thing that's happening now. Right here on September the 9th, 2024, they bought in again on Meta. Meta shot up from 526 all the way up to $740. The trend changed to a downtrend and it was dropping and dropping and dropping. But look where it stopped at. It started right back down here in these same buy orders, right? It started filling these orders again, and then price shot back out of that buy zone again and went all the way up to almost $800. And now we're back at another zone now. And see, it's not a coincidence that just now recently, in the past month or so, Meta went on a strong downtrend after they reported earnings. And inside of their earnings, they reported they were spending a lot of money on AI. And so shareholders wasn't really happy with that. So they started selling the shares. And so price pushed down from all the way up here at highs, but look where it stopped at. Right inside of this weekly order block that was already established back in March. So when you understand how these people buy, or you have a chart that can track where they're buying at, it makes when you're trying to just, especially if you're buying shares, when you see Meta price or a stock that you like, say you like Microsoft or you like Tesla, all you would have to do with a chart like TradingView, you can just right click above this order block and then add an alert on it and say every time Meta comes near this order block, so you create an alert. And so when price comes down here, it'll trigger that alert. Same thing you could have done up here. Once you see this order block, you can set an alert. And then when price drops down into this buy range, you will know that it's time for you to buy some shares if you were just trying to hold Meta for long term. The other side to that is that when you go down to like some of the lower time frames, like the daily and things like that, we can also see where they plan on selling the stock at before they sell the stock. So here we can see they bought in, price pushed up, and it came up to like what it's $800, right? But then it pushed back down and it came right back up to that same sell order. So this right here is just like when somebody says, okay, I bought Meta down here at 500, but when Meta comes up to $800, I want to sell, 50% of my position and take profit. We can see every time they take profit or every time they plan on selling Meta, just like we can see every spot they plan on buying Meta, right? And so right now, even though Meta is pushing up, everybody knows that understands, saying how to understand order blocks and see these levels on the chart. People that can see these have an advantage because we know that when Meta gets up to $750 and in this range, especially since it hadn't been back up here in a long time, it's gonna push up here and this is going to start triggering sell orders. So once the price gets into this red zone, it's automatically going to sell shares of Tesla because people have sell orders sitting here already ready to sell not Tesla but Meta as soon as it gets up to this sell order block, right? And so this helps you to see, saying where to take profit at and and where to buy in at. So this is the purpose of these order blocks so that we can track where the people with all the money are buying and selling shares or whatever stock that you plan on buying. A lot of people was looking at SoFi, right? And SoFi pushed up and it was going on a bull run, right? And it was pushing up. Everybody was buying SoFi. But every time it had a dip, where did it come to? It came right back to this same buy zone where they bought in at. And this is on September the 4th. It pushed up and came back down here on October. It shot back out of here and went up to highs. It dropped back down, came right near it, then shot back up again. But look what it's doing. It just keeps coming up and down into their sell orders and then their buy orders and the sell orders. Now, how do you know when a stock is going to drop down and test this next level? if the candle, which is this green thing and this red bar right here, these are called candles. And so it would have to take a candle to come down here under this green zone, and the candle will have to close under it. And we'll get into what it means for a candle to open and close and things like that. But when the price is coming down here for now, this is just a buy zone to where they're accumulating SoFi shares, and then they're planning on selling it when it gets above 30. Every time it gets above $30 and up in this range, they're going to take profit. When it comes back down here, they're just rinsing. In the stock market, this is called rinsing and repeating. And so we can just see everywhere they're going to rinse and repeat ahead of time. So the way that you become a good investor, well, not if you're trying to hold something forever, you buy it low and you keep adding to it, like if it's a strong company. But if you're trying to hold something for like a year and sell it, or you're trying to just hold something that makes some money, you want to buy in with them, right? So I don't want to buy a stock by myself because I don't have enough money to make the stock shoot all the way up, right? So I want to buy in when the billionaire is buying in. So I want to buy, and I want my average price of SoFi to be the same thing as JP Morgan's, or the same thing as Kathy Woods or Warren Buffett. Whoever buying SoFi with all the money, because I can see what they spent on it. If they think SoFi is a good buy at $25, between $24 and $25, then I think SoFi is a good buy between this range. If they think SoFi is worth, taking profit between 29.80 and $31, then I think it's time to take profit on SoFi. If it decides to go higher, it'll close a candle above this red zone, and then it will try to go even higher. So we look at Tesla. Tesla just did this exact thing. For a very long time, Tesla's top was in this price range around 470. So if I put my chart in replay mode and just go back before today, we'll see that, so they've been selling Tesla when they come up to like 470, they had been dumping it, right? So now this is a good example of them rinsing and repeating, or selling and showing us where they're going to sell at. Tesla pushed up to this level. Uh, Let me close this out. It pushed up to this level back on October the 2nd, and it pushed back down to almost $400. It pushed back up here again in November, and then it dropped all the way back down. They kept selling it at that range. It came all the way down to 380. It pushed back in this range recently, but look what happened that was different. Today, it came up and it closed the candle above that order block, right? And so now, where yesterday, that was actually yesterday, right? So yesterday it closed a candle above that bearish order block. That is what proved that it was so many buyers that was buying Tesla shares yesterday that they filled all the sell orders. That was the trigger to let us know that, okay, now they think Tesla is ready to go to a new all-time high and push higher. And so today Tesla went on a small little bull run, and it pushed up, a significant amount, but they first had to get above that red zone. So now, since they're above that red zone, now we can look for higher prices. Maybe they want to try to go like to 502, $505. And there's tools that you can use to see even those prices, right? But for this training today, you just want to stick to understanding how you can see where people are buying and selling the stock. So just like even in crypto, we can see everywhere they want to buy Bitcoin. Look at this. Bitcoin shot up from, what's this price? 80,000. It shot all the way up to 126, $125,000. And then Bitcoin dropped all the way back down to just screaming down. But look where it stopped at. It stopped right back at where they bought it in April. Came right down to this money, pushed out of it, and now it's ping ponging between this range. So how will we know when Bitcoin is ready to drop? You will see it close a day under 78,000. You will see it's live right now, but you will see it close under this green zone. And that's going to signal that Bitcoin wants to drop lower. And then when you go to a higher time frame, like this is a 1 day chart, and then we're going to go to a 1 week chart to see where the orders are on that chart. And you see we have really, really strong support down here. But for now, it's stuck at the daily chart levels right now. And so, but you can see this with any crypto, with any stock. If you understand this, then you can understand where the money is sitting at on any stock or any crypto that you're trying to buy, and you don't want to just buy like just to buy just to be buying it. You know what I'm saying? Just because somebody said buy, and you can say, okay, let me pull up my chart and let me see exactly where the people with the money are actually buying this stock at and where are they selling it at. And that way you can come up with a game plan on where you want to take profit. So this is one pillar to trading, but this is a really important pillar because in the trading, we're called retail traders because we have little money. And anytime you talk to anybody with experience, they're going to tell you to invest or to trade in the stock market. You want to not trade against the trend. Well, this is showing you how to follow the trendsetters. Okay. Money is what sets the trend. These billionaires and these powerful people with all this money, they set the trend. They can either make the stock market crash or they can make the stock market run up to all-time highs. We don't care if it's crashing or if it's going to all-time highs. We just want to trade what they trading when they're trading it, and we want to buy in with them. You know what I'm saying? I don't really care if the stock market drops. You can make a ton of money while it's dropping. I don't care if it goes up. Um, 200% over the next month. I just know that since I can understand where they're buying it and where they're selling it, and I know how to see what trend they're setting, then I can just participate and trade in the direction they're going in. So this covers where to buy in at and where to sell at. But it's another part of trading that you want to understand the trend. And so you will see people put moving averages on their chart, and these are these little, these little squiggly lines you will see on a lot of people's charts. Some people have like a lot of them. Some people have like the main three they want to use, three or four. But these moving averages are designed to help you see the trend of a stock. And so the moving average that I use is the 12 EMA. Okay. So you have different versions of the 12. And but for this training, we're just gonna cover this one. This is called a 12 exponential moving average. These moving averages, you can tell, see when this thing is pointing down and slow down, you see how these candles are dropping and they're red. And these when you see red candles, it just means that the price of this candle closed lower than when it first opened up, right? And so when we're looking at a moving average, which is this blue line right here, I'm gonna turn this part off right for a second. So we're just looking at this moving average. So this is called a 12, the 12 EMA. That first number in the moving average, it only represents the amount of candles that the moving average is looking at to try to come up with what the trend of the stock is. And when you're looking at trends, you're looking at either the stock is flat. That means the stock is moving like this. This is flat. You see how it's just moving to the side, almost like in a straight line. It's just consolidating. So the moving average is just kind of like it ain't up, it ain't down. It's just kind of just flat, right? And then you have an uptrend, and then you have a downtrend. Okay, so when you're looking at a moving average, the one of the most powerful ways that you can trade with a moving average. So it's one thing to understand the slope of it, or if it's pointing up or pointing down, but how do you trade that and make money? And so the way that you use a moving average to kind of see when the trend is going to shift, one of the most powerful ways to do that is to look for the candle's behavior around a moving average. And so when we're talking about candles, this green block looking thing right here, this is a candle, and this red one is a candle. But all these candles look different, right? But the parts of a candle is you have a body, which is this thicker part, and then you have the wick, which is these long little stems. Just like you have a candle in your house, you have a wick. They kind of try to name it after that type stuff. And so each candle has a wick and a body, but uh all these candles, you know what I'm saying, you see these different colors, green, red, green, red. All this means is that if only thing that can turn a candle red is if up here at the top you see this open price. This O right here just means that you look at the time. So we're looking at a weekly candle. So on October the 28th, on that Monday, when the market opened up, this candle opened up at, let's look up here at this O. This candle opened up at $270, right? All right, so we see $270 way up here. And because this candle closed lower than how far and what it opened up at. So you see this C right here. So if I put my mouse back on that candle, this candle opened at 270 and it closed at 248. Because it closed lower than what it opened up at, the candle is red. The body is red. And so the fat part of the candle, this little thicker part, it just represents the open and the close. What price did it open at? What price did it close at? If the candle's body is green, that means the price opened up at a certain level. And then when it closed higher than what it opened up at. So it increased in price. This one decreased in price from when it opened up, and the wicks of the candles just represents the high and the low. The wick is this is how high the candle went. This is how low the candle went, and that's all that matters. Now, for us, and when I train people on moving averages and candles, the relationship I want you to always pay attention to is you're looking for what I call a dominant candle. Now, a dominant candle is what shows you what direction the stock is trying to go in, even before it kind of slopes over and points all the way down. If you see a candle open and close, like, and when I mean open and close, we're looking at the open and close. Basically, if you see the entire candle, every part of the candle open above the moving average, and no part of that candle touches that moving average, that means that price has dominated this moving average. And then now the price is ready to shift up and try to push to a higher level. The even stronger confirmation in that is if you ever see two candles in a row, like consecutively, open and close without either part of the candles touching the moving average, the trend is going to try to push up. Like if it does it above it, the trend is going to try to continue up. If it does that beneath it, the trend is going to try to push down, right? And so you can see here how we got this candle that opened and closed above the 12, and then it pushed up from 250 to, like, what is this price? 489. This is a weekly chart. So that's a strong swing trade just by looking at the 12, right? And so recently we was consolidating, right? You see how Tesla was recently in this downtrend. We opened and closed a candle. We was in a strong uptrend. We opened and closed a candle under the 12 moving average. No part of this candle touched the 12, and price dropped from what, 360 all the way down to 212. Then we got this candle right here that opened and closed back above it. And even though these candles are touching the moving average, we never got a candle to fully open and close back under it. So they just consolidated and it ran flat. But getting in here at 330, it's already ran all the way up to almost $500, right? Just from that switch of trend, right? This candle pushed under it. But the reason why I'm saying you need a candle, a dominant candle, to open and close under the moving average to say, okay, now the trend is going. You see how the moving average has bent down, but this was a fake out. But this type of candle wouldn't fake me out or the people I train because it pushed down under the moving average, but it never opened and closed with the entire candle being under the moving average to switch the trend. It just pushed down to fake people out, and then it reversed up. Okay. But so because the 12 moving average is only looking at 12 candles, this moving average is only good for a short-term trend shift. So it can show you the trend shift just for a little while, right? So let's go down to a lower time frame, like the 1 hour, and look at the same thing. Um, it can show you the shift in the trend just for a little bit. So you see how we were under the 12 here. We got an open and close candle. We pushed up from what is this, 430 up to like 460, right? And we lost the trend. We truly lost it because we got an open and close candle under the moving average. It closed at 443 and dropped down to 435. We got back above it. We chopped, lost it here, and then we regained it with this bearish candle. Even though this candle is green, this is kind of a bearish candle, right? It pushed up and it dropped all the way back down. But this candle, even though it got this long wick on it and it's kind of bearish, right? Um, we pushed down and closed right on top of this moving average, and we still held it with these ones. So it closed at 450. We came down, tested it, tried to lose it right here, never got an open and close candle, held it, and then we pushed up from the close of this candle, which is 450, all the way up. What's this? $40, right? You see that? The trend shift we pushed up just by using this one moving average. Now, this is going to tell you short-term trend shifts. So when you're trading, you need something that's going to tell you the short-term trend, but you also need a moving average that's going to tell you the long-term trend. And that's why you see most people that trade, they use the 200 moving average. Anytime you see a 200 on the chart, that trader is using it because the 200 is going to tell you if the stock is bullish or bearish. Okay, so when a stock loses the 200 moving average, that means that stock has entered into a bearish trend on whatever time frame you're looking on. So if you're looking on the 1 hour time frame, and that's the same thing I was telling you guys with SPY that got on the call early. If SPY gets under the 200 moving average, the bears have taken over the 1 hour time frame. That's not a time to be hammering down on calls because the trend is now bearish. It can drop further and it can drop quick when it's under that 200. If I zoom out on the 200, you can see that when price is under the 200, you see how it has these big drops. It comes up, tries to get back above it. And so when the stock is predominantly over the 200, you see how we have these these little small pullbacks, but these are healthy run ups, a healthy trend. So Tesla wouldn't be able to make the type of move that is made so far if it was under the 200. But because it's above the 200, it's in a decent uptrend, especially if you see this on like a daily time frame. When stocks get above the 200, this means that they're in an uptrend. You see how the 200 is pushing up, and we have when the stocks gets under the 200, because the 200 moving average is looking at 200 candles, you can see these downtrends pretty easily, saying, when a stock is under that. And so one thing that I did with the 200 moving average and the chart I designed is to help people to be able to see not only the order blocks on where the money is coming in at, but what I added to the 200 and the 12 is something called dynamic color change. And so when you're looking at your 12, the only thing that can flip the color of my 12 to this red bearish color is if a candle, like we just talked about and learned about, open and closes with the wick and the body of the candle under that 12 fully, then it will flip the color to red and show you that we're in this downtrend. Same thing is true about the 200 moving average, just looking at the 200 candles to tell you the overall trend of the stock. Only a candle that opens and closes under it fully, not a candle that, I don't care how big the candle is if it's just crossing it. But if a candle opens and closes with the body and the wicks under it without touching the 200, it'll flip the color to red to let you know that the trend has flipped bearish. So you can easily open your chart up and say, okay, I want to buy calls on Tesla. But if you see that your 12 is red, your 200 is red, then you can see that, prices in this downtrend. So you'll do better, right? So like, look, we're under this 200 is red, right? The trend is in a downtrend. You're having these little short pop-ups with the 12 because it's getting above the 12 and trying to push up. But when the 12 is back above the 200, you see how we had this blue gold cross? When the 200 is yellow and happy and sunny, right? And the 12 is blue, and you know that the stock is in a healthy uptrend. So it's kind of in one of those buy the dip type of trends. You're above the 200, you're holding the 12, and you're retesting it, but no, the trend is in an uptrend, right? And so you can easily look at your two moving averages and see the trend of a stock pretty quick. If the candles are under the 12 and the 200, you know that you're in a pretty extensive downtrend. So you want to be buying puts when this is happening. And when you're above it, you don't want to be buying puts, and holding them for a long time if, saying you're above your 200 and you're above your 12. Okay. So when you're trading in the stock market or you're trying, even if you're investing, it helps you to, when you're trying to buy shares and things, if you know, okay, Tesla price has just come down to this order block. Maybe you missed this, but then you see, okay, well, at least it's back above the short. It's the short term trend is in the uptrend. So if I wanted to make some money, I know that my long term trend is in the uptrend and my short term trend is in the uptrend. So even if you bought your shares in around this range, you still know that you can buy shares at a decent price before it gets too high and away from your moving average. And so this your moving averages show you what the trend of a stock is. The numbers in front of your moving average, which is 200, just means that it's looking at 200 candles. The 12 is looking at 12 candles. And these lines are just trying to help you to see what the trend of a stock is. Okay. Now, the other side of trading that we use and that takes traders the longest amount of time. If you ever see a trader and they say, or even if it's just a normal investor that's managing, a 401k and they're trying to watch a stock, and they say, well, I gotta go home and do some homework. I gotta get my chart ready, things like that. What a lot of traders do is they'll go to a chart and say they may start with the 1 month or the 1 week or something like that, right? And you will come onto your chart and you will draw, a line here at the top of that candle body. You might draw one at the top of this wick. And I don't want to make them this big. Okay, so you're on a weekly chart, you draw one at that wick. You know what I'm saying? You're just looking for where candles are touching that, right? So you're looking across, you see a lot of price action up in you, or you want to capture that high. You want to capture this high. You see a lot of price action touching at this resistance level. And so you will spend a lot of time. And so you did that for the 1 week time frame. Then you had to go do that for the um, the 1 day time frame. You might grab that level and grab this high. And some people will flip their candles. Let me take this replay mode off. Some people will flip their candles to a line chart, right, to make it simpler, right? So you come in and you'll still be drawing lines on the chart at these peaks and valleys, right? And so you spend a lot of time doing that, and you have to flip on different time frames. And if you went to Meta, for example, then you had to start all the way over, and draw a line here, draw a line. If you do this and you use TradingView, you can always click this lock and this pencil right here. This locks in whatever drawing you're doing, so you don't have to keep on clicking over there. But you will be drawing these type of support and resistance lines to prepare yourself to trade the stock. Um, and it's just like what people do, right? That's how you trade. And then they will manually draw out these order blocks, right? So they'll grab a rectangle, draw a rectangle here for an order block or whatever. All right. So what I did is I coded this process out so that when I'm training people, because learning how to read a chart is not easy by itself, but also when you have to do this type of labor work, a lot of people just give up on learning how to um, set up a chart and do technical analysis on a chart because they don't want to do this part, or this part is too technical. So they just give up on that. And so you find yourself just listening to your favorite YouTuber and saying, okay, well, they said get in at this price, or, stocks for jobs, which I love. Stocks for jobs said get in at this price right here and then sell at this price. Or, whoever else you listen to said get in right here and get out right here. And then you be on your Robinhood chart and you just be watching that, your phone screen. But what I designed it, since I know traders don't like to do that, or it's hard to trust that. Sometimes you can do all that work and then you get in the stock market and the price will just blow through all those levels and then you don't have confidence in it. So what I did is I coded this out to where so if I turn on these levels, I coded that process out to where I'm coding looking at the past 400 candles on whatever time frame you're looking on, whatever stock ticker you're looking on, and it automates that process to where you don't have to draw support and resistance out. It draws it for you, and you can see the chart is respecting, all these levels. And so now it doesn't matter what stock chart I go to, it's already, even these blue lines that I just drawn out, it's already drawn over those lines. And so if we go to any ticker, any time frame, support and resistance is already mapped out, right? And so we already have our levels already mapped out. It don't matter if you go to a 3 minute, 5 minute, 1 minute, 30 second, doesn't matter. It automates it and looks at the 400 candles on a 30-second time frame, whatever time frame you go to, 1 minute, 3 minute, 5 minute, 15 minute, whatever stock you go to, all these levels are already mapped out, pinpoint accurate, because it's using code to go and get the accurate levels, way more accurate than levels you can put on your chart and accidentally move some of them when you're trying to drag your chart up and stuff like that. So it automates that process to give the trader confidence. So what does that allow the trader to do at this point? Just like a person's trying to read or learn how to read weather and that type of technology. a wolf that I train, you just looking at your chart and you're trying to understand, okay, my 200 means this, my 12 means that. This is what these order blocks means. This is my support and my resistance levels. And so you just trying to get an understanding of what the components of the chart are, and then you can start reading the trends. So, okay, we just had smart money buy-in right here. We see that our short-term trend is bullish and our long-term trend is bullish. And then you can enter in, you can see that okay, I have resistance at this level. I have another take profit or resistance level here. And so you can see what's going on without being blind and saying, okay, I know I'm supposed to get out at this price, but you don't understand that you're trying to get out at this price, but there's also some resistance here. So you may have to get out earlier, or you're trying to get out at somebody said, oh, run paying W up to 188.50, but you can't see that you have a whole lot of bearish order blocks before that level. So even though it's looking bullish and it's pushing up, it's about to stop right here because you got an obstacle in your way that's blocking you from 188.50. But you can see it and be able to say, okay, I know everybody trying to get out at this price, but I can see on my chart that I need to try to exit it $1 earlier because there's a lot of sell orders sitting there. So that's what you want to get to the point of doing is your homework being looking at trades, and just building trade plans and knowing where you're going to get in, where you're going to exit. So like, for example, this stock is down here in this order block. The 200 is still under the 200, so that means it's bearish. But once the 200 gets down here and you get above it, then you know that, okay, I can play pan W from 187 to 195. If it closes a candle under 183 or 184, if it loses these order blocks, that means it's probably going to drop down back to 181, right? But at least you will be able to see, where the money is, where they're going to sell at, where they're buying, where they're selling, what the current trend is of the stock, and that way you're not seeing a rejection right here. And then you see that you're under your 200, you lost it. And you're trying to, you have false hope and just holding something, but it's in a strong bear trend. And so now you can make a decision. Okay, if I lose this level at 207, I'm going to go ahead and put a stop loss in and sell my shares here. And I'll wait, what I'm saying, and go to a higher time frame like the daily and look for where's the money. Okay, so if it loses to 200, I'm gonna wait till it gets back to where they bought in on August the 21st. If it comes back to this level, I'll buy me some more shares here, right? And so you'll be able to make those type of decisions instead of not being able to see anything and understand anything. Okay, so that's what I'm gonna cover today. I'm doing the same training tomorrow, and tomorrow I'm going to cover going a little bit deeper into like how do we trade, that people that day trade and things like that. I use the pre-market high and low. I'm going to cover that in detail so that you all can understand that. Um, I do have some lessons already on YouTube. If you go to youtube.com and then Shon-TheWolf, these are all my videos. A lot of them cover what I just covered now, but go a lot deeper than that. Um, And so we're going to just build from scratch. I'm going to start with these order blocks. We're going to talk about other things within the chart that's like more complex. But tonight, I just wanted to cover the moving averages and then the order blocks, support and resistance. And tomorrow, I'm going to cover how do you know what a confirmation system looks like? Like, how do I know exactly when I enter into a stock, when I'm going to take profit, and these different things. And one of the moving averages that I made is a customized moving average that I created that I use to get into stocks early. It's a simple confirmation. We'll cover that as well. But for the next 10, 20 minutes, if you all have any questions, you can go ahead and unmute yourself and ask, and we'll cover some questions for a minute, if anybody has any. All right. So if not, I appreciate y'all jumping on. I'm gonna be on again at the same. I don't want to take up too much of your night, so you can have that time back. We'll be here. I'll be here again tomorrow at 7:30 Central, and we'll go into the next phase of this training. And this training right here will be available on that YouTube channel tonight. So I'm gonna put a copy of it out there so that if you want to go back and review some of the things we covered, it'll be out there. Okay. And I appreciate everybody joining.
Thank you, Shon.
No problem.
Thank
Appreciate you, Shon.
you.
Thank you so much.
That was
Thank you
so
so much,
helpful. Appreciate it.
Yes, sir.